All right, good morning, everyone. Welcome to the live spread trading. Actually, let's change that because this is called trade findings and adjustments. Pretty interesting. If I could ask this group this morning, what came across as good news last night? So actually, let's start last night. What came across as good news last night? Of course, China, things are getting done. We're making progress. In fact, the futures last night were up 100 points on the Dow and 35-ish. Nope, it was 25-ish on the S&P 500. Good news, right? The trade war, the cause for a global slowdown was being resolved. Plain and simple. Trump hits a softer stance on Hawaii, and I don't know how to say her name exactly there. She and Trump making progress. I'm trying to see some of what was said so I can get on it. Although there is the worry that people are getting smaller tax returns, smaller handouts. U.S. and China are sketching the outlines of a deal to end the trade war. That's what came across last night. U.S. and China are sketching the outlines of a deal to end the trade war. So what happens promptly this morning? Well, economic reports. Hey, existing home sales was at 4.94 instead of 5.05 million. Initial claims was better than expected. The Philly Fed, though, came in at a negative 4.1 instead of being up 12. Leading indicators, a market mover, down negative 0.1% instead of being up. Durable goods was 1.2, missed by the expectation of 1.3. And durable goods minus transportation. So there you got to take out Boeing and Ford, right? Minus transportation was 0.1 instead of a 0.2. So our economic news that came out this morning was all negative. So I just listed a bunch out there for you. Initial claims, Philly Fed, existing home sales, leading indicators, durable goods ex transportation. Can someone tell me what portion of that outweighs the China-U.S. trade deal? What portion of that outweighs the U.S.-China trade deal? Some of it has to, right? Something here has to outweigh that to create our markets to go negative, right? So what part of that outweighs the China trade deal? Lance, it is not a trick question. David W. Kind of doesn't make sense. I agree with you. Even worse, Bullard, who is a vocal Fed chair, came out and said, hey, they're raising rates too fast, that they want to take an extended pause or extended period where they don't slow down the U.S. growth. So again, what part of this news is more important than the China trade deal. Then one of the vocal Fed chairs, Bullard, saying, hey, Fed's going to take a step back, not kill the growth. Tim, none. I agree. Thank you. Boy, it's like pulling teeth from you guys today. None of it is more important. None of the news is more important. So here's the decision, right? So if none of the economic reports, headlines, headline news, stock news is more important than the China deal. It's not really why. What do you do? You start adjusting? No. Do you start liquidating? No. Shouldn't do that either, right? Here's a funny question. I mentioned this yesterday. Do you start panicking? Do you? Do you start panicking? Yes, but you don't start trading, right? Oh, excellent comment. In fact, two just came up. First one I saw, sit and wait, give it a day. I love it. Take a breather, right? And that's the other one that was said. And how have I said to take a breather in the past, David? David W, excuse me. We got two Davids here. David W, how have I said to take a breather? Do you remember? Nail your hands to the chair. Yep. That's it. Perfect. Now, what ultimately makes that decision? To wait? What ultimately makes this decision to wait comes down to one thing. What is it? What's that one thing that you can sit and wait? There it is. How much have you lost today? If your portfolio is down by half, you're bailing. You're getting out of everything. If your new position that you put on yesterday that you guys saw me put on, right? Kind of got hooked on NVIDIA. I've got another position as well. But yesterday for $5.50, I stuck on an NVIDIA position. Good earnings. Good China news. NVIDIA should be up at 170, really. Just has to break that 160 support level. I made the decision, bad decision. But yesterday, I made the decision. Geez, I can't. Yesterday, I made the decision to purchase a bulk call spread and thought it was a good buy at $5.50 per contract. Unfortunately, when you look at your net, right? When I looked before I started here, that was only worth $5. So guess what? Thinking it was a good deal yesterday at $5.50 was wrong. But $307.50 minus $157.50. Good thing I can't type to save my life. So let's try this one more time. Minus 157.50. I'm only down 150 bucks. So you're going to use those numbers to talk to you. Yesterday, when I thought it was a good purchase, I was off by 150 bucks today. I could have gotten the same trade yesterday 150 bucks cheaper. I could have limited my cost into the trade and made it about 9% cheaper. And I warn people all the time. Yeah, you know what? I think Apple's worth owning at 160. Well, that's because it's traded at 228. But is Apple worth owning at 160 if it goes down to 100? Probably not. It is a foolish comment. A foolish comment to say, hey, you know, I'm willing to own a stock at a certain price, especially when that price is lower than it's currently trading. The correct question is, are you willing to own that stock, Apple, to 160, if it's trading at 125? And if you say yes, you better have a damn good excuse or reason. It's really going to be an excuse. It won't be a reason on why you're okay at owning a stock $35 more expensive than it's trading at. Because in real life, you don't own stocks. You don't make money owning stocks that are more expensive than where they're trading at. You lose money. Which comes back down to that ultimate question. What ultimately makes the decision on anything you do, investing wise, is how much are you down? How much money are you losing? It's funny because greed takes care of the upside, right? We don't worry about how much money we make. It's how much money are we losing? And in all honesty, that's kind of, that's where you make the difference. You make the difference in how you, not how much money you make, but how you mitigate your risk. If you can mitigate your risk, you're going to be in good shape. As I look at positions day in and day out, I don't look during the day. I should be typing this in here too. As I look at positions, and it's not fair to say not during the day. So let's just say, look at positions during the day. I am comparing how the total portfolio value, and in my case, that's like 83 accounts, are faring compared to the S&P 500. So right now I'm down, 0.2%. and, or at least I was here, I'm down 0.2%. And as I look at the S&P 500 right now, the S&P is down 0.26%. So today, right now, I am beating the S&P 500 by, let's say, by 0.06%, or by 25% of my investable assets. I'm beating the S&P 500 on today. The reality, no single day matters. I've got earnings on NVIDIA tonight. I've got earnings on American Outdoor Brands Corp. Next week. I've got Apple, Visa, Disney, Under Armour. I've got a lot of things that are out there. But the decisions on what I'm going to make are based on how much money am I losing. That fear takes care of you. Now, I have a client of mine that I consider a really good friend that said it most perfectly. Sit and wait, give it a day. You know what the biggest problem with education is? They've promised to trade every time they meet. They promised to trade every week. They promised a bullshit, ridiculous return. So if you're in an education, trading in a paper account, teaching theory, you give a trade today. For a real investor, trading real money, you sit and wait and you give it a day. Bill, you nailed it. There's not a better way to say it. David and Tony, I see you're here. You guys are kind of day traders, and I'm sure you can tell me, hey, we did this, we did that today. I'd ask both of you, show it to me. I could turn over my screen right now to either one of you, and it could be your screen, and you can show it to me. Let me know if you want to. But really, the best thing that you could do today might be, depending on your portfolio, I think one of the best things, and what I am looking at doing today, I am looking at dollar cost averaging, because I believe, think, and hope that this is a one-day blip. So if I was going to do anything, I could lower my cost basis on NVIDIA. I'll get yesterday's trading session posted up, where I put this on yesterday, got filled, kind of shocked me, kind of worried me. Looked good because yesterday I was up a little bit. When the day was over, I was up a little bit yesterday. But really, because I had the capital, this is one where I could add a couple more contracts. More towards the end of the day. I'm going to have to do it on my phone because I've got a 1 to 2 o'clock appointment. But I could add a couple contracts right here. I could be in a position that, you know what, NVIDIA in the next 60 days should at least be up to 170. So I can give it a run. I can see what we're going to do. I can dollar cost average. I might put it into a couple other accounts for people that have a similar risk tolerance. Tony, Dave. But a David W., a Bill, a Keeve, you guys might kill me if I stuck this in there. Mary, you'd kill me. Lance, I'm not sure about you. Dan, I don't know. Who else do we have here? Abe's not here, but I wonder if Abe would want it. It's pretty interesting. Pretty interesting, pretty uncertain. But some days you got to know when to take a breather and nail your hands to the chair. I told you this wasn't going to be a long one. And really it comes down to not a day to force a trade. This is a day to understand the psychological part of trading. This is the day to realize you are not an education. You are not trading in a paper account. You are not really, with all due respect, putting on a bearish trade on a one-day bearish trend, or trying to put on a bullish trade on a bearish trending day. This is a simple no-brainer to give it a breather, to not trade, to not force anything. Now, again, if it doesn't matter and it's a paper trading account and you're trying to pull it off on how tough you are to be stupid and place trades on days like today, then you can call yourself an education. But an education should be teaching you when it's appropriate to sit on your hands. Any questions? Any questions you guys have that I can answer for you? Tony, you're killing me. So couldn't you place a short-term trade? And Tony, I'm going to say this with all due respect. Of course you can. And could you even get out in a day trade playing the market down? Of course you can. But is it prudent? Is it smart? Is it gambling? Are you willing to lose what you put on that trade to get in on a day that you're hoping something's going to happen? Of course you can. But I'll be honest with you, I choose not to gamble with my clientele's money. I choose not to gamble with my own money. And I also know I've got to be accountable to my wife on how we deal. So yes, you can. But is it smart or prudent? And prudent's a hard word to describe, right? What's prudent for one person is not prudent for another, just like risk tolerance. But don't think about how much money you're going to make. Think about how much money you could lose. Because ultimately what makes your decision is not how much money you're making. That's how much money you could lose. Make sense, Tony? All right then. Hey guys, since I don't see anything that I would do today, I'm going to call it a day. I hope this is important to use on looking at your positions and how you look at your account day to day. How usually a longer term time frame can give you some clarity on making your decisions. Guys, I hope this was helpful. I look forward to seeing you next week. Have a great weekend. We'll see if we get our bounce maybe tomorrow from any China news. And I'll talk to you again next week. Take care, everyone.